Welcome, everyone, to International Partners. This webinar today is investing in multifamily commercial real estate using a retirement account with special guest speaker, Carl Fischer. Please stand by while we get everything situated and ready for this wonderful presentation. Hello and welcome to International Partners, investing in multifamily commercial real estate using a retirement account with special guest Carl Fischer. Today's webinar will cover understanding self-directed retirement accounts and their advantages, strategies for leveraging retirement funds to invest in multifamily commercial real estate, overcoming common misconceptions and challenges, and maximizing tax advantages and minimizing your tax liability. We will begin momentarily. Please stand by. As you're getting comfortable, please, if you would, in the chat, let us know where you're dialing in from today. We'd love to know who's with us. And please eliminate all distractions such as social media, email, text messaging. Grab yourself a beverage, and if you like, a pad and pen to take copious notes. Please stand by. All right, it looks like we have someone joining us from Redwood City, California, and enjoying a green smoothie. Okay, welcome to the call. And Charlotte, North Carolina, good morning. Welcome to, well, good afternoon now. Welcome to the call. Beautiful. Northern California, good morning. Pleasant Hill, welcome. Fantastic. Once again, ladies and gentlemen, welcome to the call this morning. We have a very, very special guest. His name is Mr. Carl Fischer from CamaPlan, and he is going to talk about investing with retirement funds or any retirement accounts in a very special and unique way. So just give us one more moment and we will begin momentarily. Please stand by. Once again, good morning, ladies and gentlemen. My name is Darren Elijah, and I am your moderator for today's event with International Partners and our webinar, Investing in Multifamily Commercial Real Estate Using a Retirement Account, with your host and CEO of International Partners, Mr. Mark Keener, and very special guest speaker, Carl Fischer. Also joining us on the call are panelists Carol Ann Flint of International Partners as a consultant and commercial real estate broker of over 20 years, and Samantha Hasty, client relations specialist with CamaPlan. Let me tell you a little bit about Mr. Keener. He is founder of International Partners, a premier commercial real estate firm focused on bringing private investors into apartment investing as a means of generating passive income and building generational wealth. Thus far, International Partners has successfully owned and or operated just over 1,000 multifamily units in California and Texas, with current goals to grow to over 11,000 apartments. Mark, are you there?
Yes, I am here, Darren. Good morning or good afternoon.
Good afternoon to you. Just wanted to see if you had any opening comment that you would like to make before we introduce our guest speaker.
No, I think Carol Ann can start it off, and then I will come back on after that.
Wonderful. Ms. Carol Ann Flint, are you there?
Hello, I am. Good morning. I have been working with International Partners for 2 years, and I attended a conference recently at which Carl Fischer was a panelist and sponsor of the conference, and I thought that his ability to speak about investing in alternates with retirement funds was an exciting topic that we wanted to share with our audience. So I'm honored that Carl and Samantha Hasty are our guests today.
Fantastic. Excellent. Thank you, Carol Ann. And Samantha, if you'd like to say hello there. I know that we're going to introduce you a little formally, but you can say hello to us. And
Hi, guys.
Samantha Hasty is a client relations specialist with CamaPlan.
Yeah, I'll put up my info at the end of the presentation so you guys can take a little screenshot of it.
Excellent.
But yeah, excited for you guys to hear what Carl has to say today. And thank you guys, thank you International Partners for having us on.
Quite welcome. Thank you, Samantha. And joining us here, we do have Mr. Jake Block. We're going to hear from Jake. Jake, you don't have to come on at this particular moment, but Jake is a senior advisor, managing principal at JBB Capital, and he may have a word or two that he'd like to share with us about his experience with International Partners. All right, so without further ado, let me introduce to you today's very special guest, Mr. Carl Fischer. Carl is a Cornell University graduate and a third-generation real estate developer. He has a very unique and diverse background that includes working as a rocket scientist at the Kennedy Space Center in Cape Canaveral, Florida. Carl brings a very unique perspective to real estate investing, to say the least. Throughout his career, Carl has successfully managed over $20 million in real estate transactions. His investment portfolio includes a wide range of commercial and residential properties, such as real property, notes, and mortgages. His expertise has led him to addressing audiences of real estate investors, brokers, CPAs, financial advisors, and mortgage professionals. His extensive knowledge and experience make him an invaluable resource for those looking to take control of their retirement funds. He is co-author of How to Invest in Real Estate with Little or No Taxes, and one of the founding principles of CamaPlan, self-directed IRA, a national company headquartered in Ambler, Pennsylvania. Today, Carl will share how you can leverage self-direction financial tools in your portfolio. Ladies and gentlemen, Mr. Carl Fischer. Carl, welcome.
Hey, thank you very much. I appreciate that introduction. And it's great to be here. And I want to give thanks to Carol Ann for meeting us and talking to us in New York. And then also we had a great conversation with Mark last week. And Darren, I just met for the first time as we were setting up for this webinar or Zoom meeting. So it's great working with International Partners so far. I love it.
Fantastic. Excellent. Excellent. So I think that we're going to jump right in and get to the heart of the matter here, Carl, if you don't mind. I want to begin with our first question. And I heard a statistic recently in 2022. It was reported that IRAs held approximately, some $11.8 trillion in investment capital. Given today's topsy-turvy stock market, high interest rates, and rising inflation, how can this tool called a self-directed retirement account help someone control and or offset the loss of value in their portfolio?
Well, most people don't understand that you can invest in alternative investments with your IRAs and 401ks. And when you add 401ks and government plans and TPAs and pension plans there's close to $33 trillion that are available for alternative investments such as real estate. And to me, the only real way to get diversity is to have alternatives in your portfolio. And when I'm talking about alternatives, I'm primarily talking about real estate and real estate related products such as notes or private placements for multifamily apartment buildings, things of that nature. So it's great if you can add to your stocks and bonds with real estate. My mom and dad were in real estate. Their moms and dads were in real estate. So I'm more heavy in real estate and real estate related products than I am in the stock market, because I understand those and I have more of an expertise in those than I do the stock market. I hope that answers your question.
Yes, absolutely. Today, obviously, with International Partners, our clients are very much interested in real estate and commercial multifamily real estate. But a vehicle like this can be somewhat confusing as it relates to being able to take a retirement account such as a 401k and then direct some of those assets into a piece of property. So I think our first question is, because many International Partners clients are actually, employed, is how can they maneuver funds out of a 401k? And this is probably a two-part. And the second part would be, can they take funds from an existing or current employment 401k and divert it into a self-directed IRA?
That's a great question. And what I'm going to do is I'm going to go to how it works on our website here, and you don't have to take notes because all of these questions are on our website. So the first thing that they need to do is they need to open up a CamaPlan account. And that's like opening up any any IRA or 401k plan with any brokerage such as Fidelity, Schwab, etc. And you can also use inherited IRAs. IRAs are very simple. If you have an IRA, you can make it self-directed by opening up that account and then transferring the money over to it in this step. If you have a 401k, 401ks have a lot of options to them. If you're young and you've just started in the company and it's not your company, the 401k may be locked up. If you've been in a company and have separated from service, as an example, moved to another job, was laid off, most of those 401ks are easy to roll over into an IRA or roll over into another 401k that you're working for. So that's the situation that we kind of look for. And we can talk about different ways that will do that, but primarily for 401k, you need to ask your HR department, can I roll any of this over to a 401, I mean, to another inherited, or I mean, to another IRA or Roth, and can I roll it over into second custodian, such as CamaPlan? Because some bigger companies will have some of their money at a Schwab or Fidelity, but they'll also allow them to move some of their money to CamaPlan. So all those are options that owners of the company can allow their employees that access. And more of them are doing it because companies have gotten sued. Like in 2008 and 9, everybody said, well, I was diversified. I was in some REITs. I was in some aerospace, drugs, pharmaceuticals, etc. But they all went down in 2008 and 9. And I think we saw the majority of them go down, at the start of the pandemic. So they didn't feel like they were truly diversified. So that's one of the things I think they need to look at. But
Excellent.
if they open up their account by filling out the paperwork, and you can click right here to do that, I think I've given International Partners a link, and I would ask you to use that link because it'll save you some fees if you use that. Just ask Carol Ann for it. And then you're going to fund your account. If it's a 401k, you're going to roll it over from the 401k into your IRA, and you have these forms here to do that, or you're just going to make a contribution. You can make your 2023 contribution with a deposit form here. Once you have your account set up and money in it, then you're going to select an investment option. And let's say you pick a garden style PPM apartment building that IP Partners has. You'll fill that out. You will talk about the how it'll be vested. And instead of having it in your name, it'll say CamaPlan for the benefit of your name IRA. And that's the only basic difference in filling out the paperwork. And the address will be the address of our company, CamaPlan. And at that point, all the paperwork will be reviewed and signed by you that you're ready to buy these assets. And once you sign that paperwork, we'll sign on behalf of the IRA. We'll complete that purchase paperwork, send the money into International Partners, and then you will go online at your portal and up here where the client login is, and you'll see the cash go out of your account and the new asset of International Partners in it, just as an example.
Wow. That's a great snapshot of step-by-step how this would actually work. We have been talking about 401ks, but can you also tell us the other types of retirement accounts that would qualify to invest in an alternative investment like multifamily commercial real estate through CamaPlan?
Sure. If you can see here, we've got Roth IRAs, we have traditional IRAs, we have SEP IRAs, which are business, SEP and Simples are business, and then we have individual K also. And we do have 401ks, which we've talked about previously, and then educational savings accounts and health savings accounts. All of these can be self-directed and put into, as an example, IP funds going forward.
Okay. And of course, we have, I see there the Roth in the beginning. Let's see. What are the steps to go from Roths, if you will? If you can just expound on that just a
Yeah,
bit.
it's very simple. If you have a Roth IRA at Schwab or Fidelity, then what you'll do is, in the steps I just talked about, you'll open up a Roth IRA with us, and then
Okay.
we'll go over to Fidelity and transfer the money into your CamaPlan account. You'll sell your stocks, bring the cash over, and once you do that, you'll be ready to purchase. Now, the money never leaves the IRAs. There's no taxable event when we do that. It just moves from one custodian to the other. So it doesn't cost you anything at that, any taxes or penalties.
And you read my mind, because that was the next question. What's the withdrawal penalty? But you mentioned, again, you're simply rolling over from one custodian, if it's Fidelity, if it's Templeton, whatever it happens to be, Vanguard, into another custodian, CamaPlan, and just in a different vehicle. Okay. So
Absolutely, Darren. You said it better than I could, I guess.
no penalties and taxes. The money or the asset is in the account. Okay.
Right.
Next
Yeah,
question.
You want to think about it as you put cash into your account and you buy stocks. Now you put cash into your account and you buy into real estate.
Yes.
And anybody can do that. However, the big guys, Fidelity, Schwab, Templeton, et cetera, won't do that unless you have hundreds of millions of dollars with them. So they made a nice niche for our business, which we started, 20 years ago.
Well,
2
Carl,
decades.
it's an amazing opportunity, but why don't more people know about, one, self-directed IRAs? I think that's becoming a little bit more common. However, investing in real estate, and to me, there's an obvious answer, but I'd like your take on why more people are not investing in commercial real estate, particularly multifamily, through a self-directed IRA.
Well, I think there's, at least three I'll touch on. One is when I started in this business, my dad died and I was helping my mom with the estate, and I borrowed some money from an IRA, and that's how I learned about it. And that was back in 1995. In 1995, there were no books, there were no articles, there were no magazines or newspapers covering it. It didn't show up on Forbes or any of the money channels. And then, I ended up calling, I went back to Cornell's library, couldn't find anything. I went to the IRS and asked the IRS directly, and they said, yes, you can do that, but I don't know where the documentation is for it. Since 2000, there's been a lot more discussion on it. I think Mitt Romney made it very apparent when he ran and had $100 million in his IRA. And then last year, Peter Thiel was talking, and Elizabeth Warren was talking about Peter Thiel's $1 billion Roth, and that isn't what the intent of the Roths were for. Whereas a lot of Americans said, well, if he can do it, maybe I can't get $1 billion, but I can get, a few million in there.
Yes. Wow.
So that's how a lot, once they see other people doing it, like anything else, they want to get into that category. The next thing is, if you go to Schwab or Fidelity and they tell you about this and they don't do it, it's called selling away. And, if you go to a registered investment advisor, they'll sell you some REITs and things like that, but you can't buy the house next door or get into a multifamily complex with hundreds of units with just your IRA with any of those people. So I think that's another reason for it. And the third go ahead.
I'm sorry, that's where I was going, but I'm going to let you finish and we'll go on to the next point, which goes back to your second point.
Yeah. The third reason is, when was the last time IRAs or 401ks got brought up around the dinner table? People are much more versed in talking about the Super Bowl or who's winning the pennant or the hockey games or where's summer vacation going to be this year. There's no sex and sizzle in the IRA world.
Okay, excellent. And now the point number two was that most financial consultants are not recommending or talking about self-directed IRA in real estate because it is not a commissionable item for them. It's not within their menu of products and services to sell. Therefore, they're not really going to promote it because they would be selling away. That point sort of leads to the benefit of investing in commercial multifamily. Does depreciation help reduce taxes when investing in real estate with a self-directed IRA?
The answer to that is, if you're not paying any taxes, it's hard to get a reduction. So, we've got examples that kind of show that, but the answer is, if your IRA buys the investment outright and the investment isn't using leverage, then there isn't any depreciation. However, in some cases, you want to use leverage, and depreciation is counted with the IRA, and you fill out a tax form called 990T, which you get to take that depreciation on the amount that is equivalent to any debt that's involved with it. And that's called unrelated business income tax.
Yes. Okay. Excellent.
But don't worry about that. The answer is, you probably don't need depreciation in the majority of cases. And if you do use depreciation, it's just going to lower the money, the taxes that your IRA might possibly pay.
Okay. So now we're in the realm of real estate and being a fractional owner, receiving passive income from a real estate investment through a self-directed IRA. When that real estate investment, when that asset pays distributions, where do those funds go?
Just like in the stock market, when you get a distribution or a dividend from an electric company or any other stock, it goes back into your IRA. So any rents or dividends or distributions will go back into your IRA because your IRA owns the asset and the rights to those assets.
Yes, and so let's just expound on that. Those distributions are then compounding in a tax-free vehicle. Yes?
Sure. Yep. They
Okay.
can, yeah, they can, they can reinvest, a bigger part with you. If you've got another investment there, they can put it in a interest bearing account, or, interest accounts have been pretty low in the past. They're getting back now to a little bit higher, but most of the time you'll see a lot higher returns by reinvesting it into, one of IP's assets, I would guess.
Gotcha. Yes, absolutely. Okay, so let's talk about your fees, the fees of CamaPlan. What fees are associated with moving from other types of retirement accounts to an investment through a self-directed IRA?
Well, that's a great question, and people are there. I kind of hate the question because the fees are inconsequential to the money that you change, that you save by having accounts in here. But we don't have any annual maintenance fee until you purchase an asset. So what we try to do is we try to have everybody open up their account and get their money transferred into our account so that they're ready when they find a purchase, they can act on it. And they're not missing deadlines or anything like that. So we ask them to do that, and we don't charge them anything until most other custodians will charge them an annual fee, $300 or $400 just to have their money sitting there, and we don't do that.
Wow, excellent. Okay.
The other thing we do is we have two fee structures for you. One is based on the number of assets in your account, and the other one is based on the value of your account. And the reason we do this is because a lot of our clients talk about other people out there. So this is what our competitors do. We say, we don't care, pick whichever one you want. And the asset-based one, if somebody's buying $100,000 house or a $3 million office building, they're going to pay $300 a year for that asset, and $150 when they buy it, and $150 when they sell it. And the value-based one, it's how much money is in your account. This is generally used for people who do a lot of transactions with lower value assets. Like some people will give $10,000 notes to 10 people. So they would have 10 different notes times 300 would be 3,000. But if they do it by 100,000, and I'll just click on this sheet down here, if you had 100,000 in your account, you'd multiply it by 661. So you'd be sitting at $610 a year for your annual fee. So you don't have to worry too much about it. I always tell people on your first deal, if it's over $50,000, pick option A. If it's less than 50, pick option B. Just because that's close to where the numbers come from. And you can change these 10 times a year. So don't worry too much about it. And if you're not sure which one is going to charge you more, we're not like Comcast. You call us up and you tell us what you're going to do, and we'll tell you what's the best option for you with what you have now and what you're going to do in the near future.
Excellent. Very good. Very good. That's very unique to see two structures like that offered in this type of a fiduciary custodial account.
Right.
Carl, I know that you are not giving advice as it relates to the vehicles that your clients are investing in. But outside of the obvious, why would someone do this? Just try to help our viewers and listeners with understanding.
The first thing is you want to have diversity, right? The second thing is you want to take advantage of what the government gives you as far as taxes. If you put, like I said in the beginning, I'm biased towards real estate. I think like a lot of the people listening here, Carol Ann, you and Mark, and even Samantha, we like real estate. Now, my dad taught me all about real estate, but when I found out that I could get tax-free income for my life, and 10 years after I die for my heirs, I thought it was the greatest thing around, right? So all my rent is tax-free. All my capital gains when I sell my position in an apartment building or an apartment building that I own in my Roth, all that money is tax-free. So if I make $1 million, I'm not paying, $400,000 in taxes, or if it's long-term capital gains, 200,000. All that money is in my account and I get to use it. And that's the main reason I do it. And that's how I improved on what my mom and dad taught me. And obviously I come from or not obviously, but I do come from a large family. I'm the oldest of 12 kids. So I pass this information down to my siblings. And when I was at the Space Center, I had a big network there. And when I opened up my company, I even got a bigger network. So we teach this and people love it.
Well, you just touched on the pivot that I wanted to mention here, but I've got to go back and ask you this question because you in your last answer, you did touch on it. And that's, what happens at the exit of a property, whether that is taking advantage of the equity multiple in a refinance, or if there's an actual sale of the asset. So just to make sure that everyone is clear, who have, invested in the past or are considering an investment with International Partners, help us just to make sure that we are clear about what happens with the proceeds on an exit from a real estate asset.
All of that money goes right back into your IRA or 401k or educational savings account, whatever vehicle you had it there. No taxes on it until, if it's a Roth, there's never any taxes on it. If it's a traditional, you don't pay taxes on it until you take it out.
Excellent.
So it goes back in there and now it's ready to invest in the next project.
Excellent. Excellent. And I don't know, I have a question that popped up in the Q&A. This question, I'm not sure if you could just clarify for me. I'll ask this question here. It says, what type of returns are they seeing monthly and yearly as compared to traditional stocks and mutual funds? Perhaps Mark, you or Caroline can answer that question, because I think that is directed toward International Partners and the returns that they are seeing on different assets that they own. Okay. Okay. All right. So Carl, this may be a strange one, but what if a client has too much money to contribute to a Roth IRA?
That's another great question. A lot of accountants out there still don't understand this, but what you can do is you can make contributions to a traditional IRA. And if you're making too much money, if you're a high income individual, then you can put that money into your traditional account and then convert it to a Roth. So you may not be able to do a contribution, but they call that a backdoor Roth. You can look it up on Google or Wikipedia and see exactly what it is. But you're basically making a non-tax deductible contribution to an IRA and then converting that to a Roth IRA. And obviously you're not paying taxes on it, because when you put it into the traditional IRA, you'd already paid the taxes on it because you're a high net worth individual.
Yes. Okay. Great answer. Thank you for that. Well, I do have one other question, and that question is um, uh, the account type. I see you have a drop down there that mentions the different types of accounts. So what would be best?
I
And I
love,
know that's a broad question.
no, I love that account. Okay. And what I do is I tell people all the time, not only you're asking the right question, which one is best for you, but my answer is you want to have as many of these as possible for you. Once you're making, think of it this way, once you're making enough money to live on, doesn't it make sense to put all that other money in tax advantaged plans so that
Mm,
you're not paying those taxes and you get to use that tax money uh, for as long as the government lets you not pay taxes on it, right? And
yes.
even on traditional IRAs, you don't have to take that money out until you're 73 years old. So you can use that money for 10, 20, 30, 50 years before you have to start paying taxes on it. On the Roth IRA, you never have to pay taxes. So just a couple of simple things. If you're not in a high tax bracket and you have extra money, I say, and I told you this before, I'm biased, put the money in a Roth IRA. I think those are good for kids that are in school, that have a job in the summer. That's a great way to start building your Roth. Traditional IRAs, if you need some tax deductions, put the money in a traditional IRA. That's what the majority of accountants tell you, in April. Hey, go make a $6,000 contribution to your IRA and you can save, $2,000 in your taxes and get that right back now.
Yes.
So you're putting 6,000 in basically an investment account, and now you're getting $2,000 back from your IRA. I mean, from your taxes, sorry.
Wow.
Over here
Okay.
in the SEP and Simples, those are business accounts. So you can have a traditional or Roth, but if your company has a SEP IRA, a simple IRA, or 401k, put money away in those, right?
Yes.
If you've got kids and they're going to need education, look at an educational savings account. If you pay for your own health insurance, this is one of the best plans out there ever, because the money, you get a tax deduction for putting it in. And when it comes out for medical expenses, it comes out tax-free. It's the only vehicle that I've seen do that. And if you want to put it in and let it grow in an account with us, that's great, because you can keep your medical receipts for, you can pay that year, or you can keep those receipts for 50 years and then take that money out of the HSA in 5, 10, 15, 20, 50 years from now. So if you're not on Medicare and you're paying your own health insurance, you should definitely be looking at health savings accounts.
Wow. Outstanding. Thank you so much, Carl. At this particular time, I think I'm going to turn the microphone over to Mark Keener and see if Mark has any comments or questions that he has rattling around. And we can close out for the day. Mark?
Thank you, Darren. Let me click over here and get set up here. First off, again, I want to thank Carl and for giving folks a quick little overview about how your IRA retirement plan can be a valuable tool in terms of building wealth. Carl, just one administrative thing too. Now that if you can click stop sharing, I have some slides I wanted to jump into as well as we wrap up. But before I do that, I did want to have you guys hear from somebody I have a tremendous amount of respect for, who happens to be a client, but also, as Darren was mentioning earlier, someone who has a tremendous amount of experience in the world of wealth management. He's worked for some of the international major banks in the world. He's trained and did his master's work over the London School of Business. And also, too, he recognized the importance of part of his wealth plan to set up an IRA or have some of his assets in a self-directed IRA that invests in commercial real estate. And of course, I'm proud to say he's a client of International Partners. He's kind enough to step away from being in his son's Little League summer camp at Cooperstown. But I appreciate you taking a few minutes, Jake. And just if you would be so kind to just, share a little bit with our audience. And then when you're done, they can kick it back to me, sir. So it's yours. If you want to be on screen, just click it.
Thank you, Mark. I put you on screen, but I'm very casual today. As Mark mentioned, my son is playing with his baseball team here in Cooperstown at a big tournament. And it also happens to be my birthday, but I would always step aside to talk to Mark because he's been such a trusted partner for me and for my family and our investments over the years. I think it was Mark who really, encouraged me to take this big step of investing from my self-directed IRA. I mean, I've worked in investment banking and wealth management and real estate development the majority of my career. I've helped centimillionaires and billionaires with their portfolios. And one thing that is constantly clear to me is the richest people I've ever met in my entire life are overweight real estate. And one of the things about real estate is the incredible tax advantage of investing in real estate. But what happens is you own real estate directly and you run into walls where you have to flip through a 1031 exchange or, there's issues about trading real estate in your personal, non-qualified plans. But through an IRA, what you can do is start buying big pieces of real estate for long periods of time where you're going to own these cash flowing assets into retirement, with very tax effectively, trading in and out of real estate tax efficiently, getting a portfolio that's going to start generating real income for you into retirement. So when you're taking those mandatory distributions, you're not whittling away at the asset base. And ultimately, the goal is to own these assets for the rest of your life and, at death, step them up in basis and provide them to your family so that they can create that generational wealth. And there's no better way to start, truthfully. The stock market's a great place to invest. Obviously, there's historically been great returns, but owning real estate, owning fundamental assets that generate wealth, generate cash flow. Mark, I mean, you've done it in your own portfolio. I've done it in mine. Why pay taxes in the interim, whether it's, a step up in when you trade a stock or trade a piece of real estate and have to worry about a 1031 exchange and a lifetime exchange to avoid taxes. But all you're doing is deferring taxes. In an IRA, you can avoid them. A lot of my real estate is held in my Roth 401k. So I'll never pay taxes on the money that I've contributed into owning these pieces of generational wealth. So, Mark, you've done a great job. You've identified some incredible projects that really hit the risk reward methodology for somebody retiring, using retirement assets. Obviously, you need to be thoughtful in what kind of risk you assign to these assets, because once the money's lost, you can't recoup it. So what you want to do is slow and steady type of investment, owning things that are going to be long-term value accretive, cash flowing, and things that make you feel that kind of wealth in retirement that everybody wants to enjoy. So I think that's my pitch. Mark, if you have any specific questions, fire away.
Jake, no, that was awesome, and no specific questions. At one point in the future, I think we'll have you back on to take it a little deeper dive, but because this is a very interesting topic, and so, but in the interest of time, I'm gonna keep things rolling here, and also stay on as long as you like. But I know that you're supporting
Mark. Thank you. I know International Partners is an incredible partner for me and for my family, and it's a great topic that everybody should really explore. So thank you for the time. Take care.
Okay. All right, appreciate you, man. Take care.
Congratulations for being in Cooperstown.
Well, I'm going to wrap things up here, folks, just by giving a little quick overview about who International Partners is. I think some people may be joining us that this may be a first time. And so I'm going to switch over to screen share. Hopefully you guys can see my screen. Panel, is my screen up?
It is.
Screen is up.
Okay, great. So who are we? Well, we're a commercial real estate investment firm that basically invests in garden style Class A apartment communities, primarily in high growth markets, and we define high growth markets as those areas that are ranked highest in terms of job growth, population growth, and demand for rental housing. You know, our when we say garden style, we're talking about Class A and B communities, and they're 2 and 3 story walk-ups. So when the pandemic hit, as far as in major cities like New York, San Francisco, they had these high-rise and mid-rise apartment buildings where people were densely connected together and so forth, that we didn't experience any of that exodus of residents, because again, in that space that's provided in our typical communities, it's something that people are very comfortable in being in. But that's the sort of the billboard sort of pitch in terms of what we are. But what we're really focused on and concerned about is we're aimed at creating a pathway towards financial independence for our private investors, and when we have institutional clients that invest alongside us as well, to perform above their expectations. Now, our investment philosophy is simply this: we want to make sure that we make a profit on the buy as well as the sell. And what I mean by that is that we always structure deals that we can demonstrate that we're buying a property at a wholesale price. We're not paying retail, meaning, so if we had to turn around and flip it or sell it, which we don't do, but if we had to, we know that we'd still come away with a profit. So that's fundamental to what we do. In terms of key metrics, again, job growth, population growth, demand for rental housing. We research and find out which markets throughout the United States rank highest in those 3 categories. And that's where we plant our flag. That's where we set our GPS to navigate and invest in those markets. Texas is something that we've invested in quite a bit in the past. We're looking into the Southeast right now, a lot of job movement in terms of growth out there. But some other key factors too are just understanding that real estate is not so much about location, but it's really about understanding the movements and migrations of people from Gen Z to baby boomers, and also understanding where are the paths of progress, where are the growth corridors taking place, and being in those growth corridors before the progress gets there is proved to be very successful for us. But ultimately, our investment goal is to make sure that your returns are asymmetric and infinite. What I mean by that is that it's low or no risk and still high return. I know the cliche, most people have been branded to think, well, if it's going to be a high return, it's got to be a high risk. Well, let me just pop that balloon right there. That's not the case. If that's your thinking, it can be your reality. But again, what we found in multifamily commercial real estate, that we can engineer deals to the point where there's low and no risk and high return. And also too, capital that's invested, having a way to structure an exit so that you're having your capital come back out within a 5-year period of time, if not that. And what you've heard about from Carl and his company today was talking a little bit about self-directed IRAs, but there's also other assets out there that oftentimes that we may not be conscious of or aware of, that also can provide the liquidity that you need to start looking at investing in real estate. In some of these cases, you may have to move the money over into a self-directed IRA, but home equity lines of credit. I know interest rates have been going up quite a bit, since we hit this inflation mark, and it seems to be tapering off a little bit. But even still, if you're paying, 5% as far as a line of credit and you're earning 10%, that arbitrage or that difference is working in your favor. You're still getting ahead of the game. 1031 exchanges, life insurance companies are just some of the other things. And we're also set up to deal with clients who have crypto and they want to move crypto into real estate investing. So let me just, tell you a little bit about, how to, keep in touch with us. Before I do that, though, I did want to just backtrack a little bit with regard to CamaPlan. This is a new relationship. We haven't done any business with them yet, so we can't speak to it firsthand. We've worked with in the past companies like Pacific Premier Trust, IRA Services. I think they're now called Forge or whatever. So there are some other, companies out there that are, I guess you would call them competitors with CamaPlan. But the one thing that Carl and I share in common was, I guess, a sense of wanting to educate and enlighten people on, the values of, what's available in this space as you move forward in setting up generational wealth. And one of the things that also that was mentioned by Jay quite a bit, several times, was the importance of building generational wealth. And real estate is one of the best vehicles for doing that. What's on the screen right now, if you have a cell phone or something like that, you can, scan the code. It will take you to either a contact inquiry. Basically, if you're on the call here on this webinar, we have your contact information, but also to next step in terms of when to set up time to, dig a little bit deeper and do some sort of assessment in terms of, investing in the months ahead. That profile is something that will allow us to assess that a little bit better. In terms of just a little bit more about our contact information, and by the way, to all these slides that I'm sharing, they will be provided with you, so you don't have to worry about writing things down. Anybody who's on there, you will definitely can stay connected. And then also too, in terms of upcoming webinar events, we don't like to mix events in terms of if we're talking about enlightenment and education, that's one thing. If we're talking about investment offerings, we'll save that for a topic specific to that. And in that regard, we do have a couple of investment offerings coming up in July, one on Friday, July 7th, and as well as a couple of weeks later, July 21st. And in terms of our next just general webinar, it'll be Friday, July 14th. So I'm going to kind of stop screen sharing here and let folks wrap up here in a minute. But Darren, in terms of going back to you, sir, and if there was any other parting remarks by either Carl and anybody on his team, whatever. But Darren, I'm going to throw it back to you, sir.
Thank you very much, Mark. We appreciate you, of course. And what I'd like to do is have Carl come back on screen, if you will. And Carl, just tell us, how can our listeners and our viewers and clients of International Partners contact you and learn a little bit more, even just with a website, so that they can become a little more enlightened about CamaPlan and investing some of their underperforming assets into a self-directed IRA and into multifamily commercial real estate?
Thanks, Darren. That's great. One of the things they can do is when they're ready is you can go right here and open up an account or contact Carol Ann for an account opening discount. But for contacting us, our office is in just outside of Philadelphia, our main office. Our contact information is here, and you can ask for Samantha, or you can, when you call these numbers, and you can set up appointments at different sales offices right now, and we will be having one out in California in the near future. And you can do that by filling in your information here, or going to calling the 215-283-2868 number, or just go to CamaPlan.com, CamaPlan.com, and you should be able to reach us with any of those informations. And obviously we're on LinkedIn and a lot of social media platforms if you care to follow us.
Excellent, excellent, excellent. And if someone does reach out to CamaPlan directly, and Samantha, please be sure to mention International Partners and attending this webinar. Samantha, do you have a different contact that you'd like to share with us before we go?
Yeah, if I could just share my screen actually real quick, I can share my contact information directly. They might make it a little bit easier too. And that way we can offer you guys the best service possible. So let me just try this real quick. Can everyone see that all right?
Yes.
Okay, if you guys just want to scan that, it'll send you to my digital card, and you can either screenshot it. I would actually recommend screenshotting it just in case the contact doesn't save in time, but that should have all my information. So yeah, just give us a shout and we'd love to help you out. Didn't mean for that to rhyme.
Yeah, that worked out fine.
But it did, so
I like
okay.
it.
Okay. Yeah. Okay. So, anything else? Any parting comments? Anyone? Carol Ann, you good? Mark, we good? If we are,
I just want to say thank you to Mark and the IP team. for having us on. We really appreciate it, and we hope that your audience learned a lot from us. And again, feel free to reach out to us. We'll be glad to help you, and we encourage the audience to bring their professional advisors to ask us questions so that they feel good about the investment and about working with CamaPlan.
Yes, and Darren, I just wanted to also return the compliments to Carl and his team at CamaPlan. Again, like I say, we share a passion that's about helping people have choices in life and doing it through a vehicle that we feel very strong about, and that's real estate. And again, I hope you guys can see my screen again with regard to the upcoming events. And then also too, I just want to thank Carol Ann for making the connection. Also fortunate to have Jake chime in just to give some other perspective in terms of people who are actually clients and also in this space and gotten comfortable with the whole thing around using your self-directed IRAs. And again, it's every deal that we've done, and it's been organic. We haven't gone on our way, but just by circumstance, every transaction that we've done always involves someone who's using their self-directed IRA plan as a way of building generational wealth. And also to just understanding that they can also now put themselves in position to stop letting their retirement accounts be mismanaged. I'm taking a shot at the stockbrokers of the world versus taking control of it and self-managing themselves, which sometimes you can probably even do a much better job. Well, no question about that. So those are options to you. And again, this is what we're passionate about doing, love doing. And, that's what life is all about, is creating some appreciating assets that build wealth and passive income for you. And let me just a little parting comment that Warren Buffett said years ago, one of the wealthiest individuals on the planet, is that if you don't find a way to make money while you're sleeping, you'll be working until you die. And so we want our folks to have a long, long life of prosperity. So on that note, Darren, I think we can wrap it up.
Absolutely. Happy birthday to Jake and happy Father's Day to all. Have a great weekend.